So, welcome everyone. Today is the 3rd of December, and wow, this is it. Last month of the year. We've been we've been fighting until now. Lots of things has been happening this year, and most likely we're going to be seeing some sort of volatility in December, the month of December, because when we look back to 2022, 2023, 2021, we haven't seen much volatility on the months of pretty much the last quarter as a whole. But I think right now we're going to be looking at much more volatility than ever before, just because we got the presidential elections on USA. We got as well some geopolitical tensions, as well economic tensions. Now is the time where all the central banks are pivoting from hawkish to dovish, or from dovish to hawkish, and etc. We having big releases outside of USA only. We have Europe, we have Japanese yen as well coming in hot. So we definitely do have a lot of things to happen on the month of December. I'm separated 4 topics for us to talk today: geopolitical and economic tensions, monetary policy updates, Eurozone dynamics, and the key market indicators to watch for the month of December. Okay. As usual, if you have any questions, please just send on the chat. I will be looking at it. I have multiple screens at my desk, so you can just send it over, and I will have a look at that once you got some time and look at the other screens. Okay. So far, how has everyone been trading? Is there good opportunities for everyone? How is how's the market presenting itself for everyone today? Did everyone catch some good trades already for the month of December? Did you guys, we're still waiting for a setup to happen, or how is all of that going? Good. I've received some comments from a few people here saying that they could make some profit, so that's pretty good. All right, before we go any further, guys, I'm just putting the risk disclaimer up, so have a look at it. Okay, let's go. All right, let me take this off. There you go. And place this on the other desk. All right, perfect. So let's just start with geopolitical and economic tensions. And I want to show first this, right? BRICS on Trump, all right? BRICS and Trump. So BRICS, for those who don't know, are a group of countries. So basically Brazil, Russia, India, China, and now just newly added is the South Africa. Okay, so we got Brazil, that is a really big export on coffee. I think Brazil holds, if I'm not wrong, Brazil coffee exports, I think, is somewhere around 56% of the whole world. For the whole world coffee. Okay. Exports in 2022, Brazil exported $8.86 billion in coffee, making the first largest exporter of coffee in the world. At the same year, coffee was the 10th most exported product in Brazil. Yeah, so as I just say, so Brazil is the biggest stake in coffee. It has been the biggest stake in coffee for decades. All right, and even if we look for the coffee price, coffee CFD, we can see that it's such a nice market. Look at that. This is a 1 hour chart. If we go for the daily, if you want to increase a little bit, there we go. Look at that, right? So we've started at somewhere around 11,000 US, and now trading at 30,000, pretty much 30,000. So that's a very good commodity. Okay, really, really good commodity. But there we go. So basically, we got some escalating geopolitical tensions, implications on global markets, and particularly the resilience, okay, with the US dollar. If we look with all what's happening, I've mentioned it, I think was most likely a week and a half ago, somewhere around that, that the DXY would be ranging between 106 and 107, and I was right. Okay, I was completely right. As we can see, he's hovering around this area of 106 at the moment. Most likely, we're going to be looking at 107 to be the prominent resistance. But that's where we had a break to the upside here, break to the downside here. So most likely we'll continue to see range bounding on here until something happens and it breaks to either side. Okay. At the moment, we don't have anything to break to one or two sides, but it has been using as some sort of hedge opportunities. I'm looking at the market to understand some sort of risk tolerance, I would say. Okay. If you see here, over the weekend, as I've mentioned, President Donald Trump, he's the elected president, Donald Trump, he doubled down on his, I would say, protectionism agenda. Okay. This is the Australia Broading Corporation. That's the ABC News. I think it's a paid website. Oh no, that's all right. It's free. Okay, we can have a look on that. So basically, as he posted, right, on December 1st, that was on Sunday, the idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. All right. Remember we had how can I say that? Maybe a year ago, the BRICS nation, they are the biggest exports, right? Russia is the biggest exports of some commodities. India is the big exports of some commodities. South Africa is the export of some commodities. Brazil is the best, is the biggest export on coffee, as we just saw. So remember that they were trading on US dollars, right? A couple of years ago. And then now they will be like, wait a minute, we are a group. We can make our own currency, right? We can do whatever we want with our currency. We can charge fair prices. We don't need to be varying. We don't need to be charging varying rates because of the US dollar rate. What are we doing? So then they came up with an idea to have their own currency, right? So they were going ahead with this. And then Donald Trump on December 1st, just giving a little bit of context so this makes more sense to everyone. Let me grab the full thing. There we go. Okay, so basically Donald J. Trump say that the idea that the BRICS countries are trying to move away from the dollar while we stand and watch is over. We require a commitment from these countries that we will neither create a new BRICS currency nor back any other currency to replace the might US dollar, or they will face 100% tariffs. 100% tariff. That's insane. So for those that were a little bit worried about the 20%, and that's not too bad on 100% compared to 100%. And should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker, as Donald Trump says. There is no chance that the BRICS will replace the US dollar in international trade. And any country that tries should wave goodbye to America. Whoa. Happy Sunday, huh? Happy Sunday, everyone. What a news. What a news to have on a Sunday. Aditya says, then they start trading in Chinese yuan and thinking of to create a new currency in the meantime. Yeah, that's correct. So they started on trading on Chinese yuan. And then after that, as they were trading on Chinese yuan and not using the US dollar, okay, let's create a new currency. And then they start trading a new currency, but then looks like they're a little bit, I don't want to use the F word here, but looks like they are a little bit with F word if they try to use another currency or try to build another currency, whatever. Okay. So as Donald Trump says, I don't think this is going to happen, right? And so basically, he is threatening 100% tariffs on BRICS countries unless they abandon plans for the de-dollarization. Okay, so while the BRICS has been incrementally moving towards alternative trade currencies, I think this hardlining stance underscores how much Trump willingness to wield economy tools as political leverage. Okay, and we can take some, we can get some takeaways from that. So basically, the dollar index rebounded sharply, as we can see here. So on, let me go for a 5-minute chart. So on this Monday, Tuesday. So right here for Saturday, Monday. Yeah, so Saturday, Sunday. There's no Sunday here, but anyway, so we open up the market with a gap move to the upside on Monday. And then from there, the market didn't stop rally. It didn't stop rally. It didn't stop rally until 106, 740. And then now did a pullback and coming back up, you know. So we did have some recent lows. We did have some recent lows around 105 here, as I've mentioned to everyone, somewhere around here, 105, 600. You know, but this pretty much reflects market confidence in the US dollar row as a global safe haven amid much uncertainty as we're having now. All right. And now, conversely, the BRICS growing influence and expansion, including members like, I think it's Iran, UAE, and I think was Ethiopia as well. It's pretty much signaling to me a shift towards something like a multipolar trade structure. And that could definitely change and challenge the dollar's dominance. Well, yes, Donald Trump can come and say, I'm going to do 100% tariff of whatever you guys do. But that's one economy, right? That's one economy. Yes, it's one of the largest economies in the world. But if they don't have that market, they will be looking to do something else, right? They will be looking to trade with other countries. As the DT just say, 34 countries are interested in BRICS. Okay, so such thing like Iran, that is huge on petroleum as well. Well, just to mention, right, UAE as well, United Arab States. Bro, they're huge on petrol as well. Like we don't even to worry about it. Okay. Another thing is Ethiopia. Ethiopia is huge on exports as well. And if we see some sort of signaling shift toward like a multipolar, as they say, more into a trade structure, it could challenge. All right, it could definitely challenge the someone is doing some writings on the screen. It's all right. Let me just take this off. Perfect. So as I say, you know, that could be giving some challenges to US dollar, in my opinion. Okay, just in my opinion, if those countries actually get together and they do what they want to do, that's going to be really big. Okay. Now, why does this matter? Well, you may ask yourself, so why are we talking about this? Okay. Well, if Trump rhetoric actually materializes into an action, we we could witness something really volatile. Okay, we could witness some trade volatility, like supply chain disruption, inflationary pressures on globally. I'm not talking about one or two countries, and wow, that would be insanely crazy. Okay, imagine all the work that all the central banks have been doing, FMC, ECB, RBA, RBNZ, BOC, BOG, everyone doing the best that they can under the reach to pretty much say, okay, now we screwed and we're going to have to raise rates again because the supply chain disruption, inflationary pressures globally is materializing itself. Imagine the emerging markets, right? So what I'm pretty much understanding from that is the G10 economies, like the biggest G10, the biggest global 10 economies, Australia, Europe, USA, Japan, Krona, and all the other ones. They they pretty much are outside of the party. It's like emerging markets doing a party, and G10 group can't be into the party. Okay, so it's very, very funny. Okay, it's very funny. It's like a turnaround from emerging countries. Well, but for now, I think markets it's cautiously optimistic. I would say they are optimistic, but they're very cautiously optimistic. Okay, so if, as we know, there's nothing imminent that Donald Trump could do, the tariff implementation that they expect to, of course, but investors, they will be watching this space closely as the situation evolve until January, that when Donald Trump gets into power, and that then he will be able to, then all the Twitter that he does, all the X post that he does, that will be much more worth. Right now is worth, but it's like, okay, once he gets on power, that's going to be much more worth, because then we're going to have not an idea, but if he wants to go ahead, he can do it. Okay, so it will be much more volatile, in my opinion. Right. So the other point is the ECB. Right. I want to bring here this chart. Does anyone have any questions before we go ahead? Sorry. No questions? Okay. All right. So moving ahead, we've just talked about the geopolitical and economic tensions. Now let's have a look at the monetary policy updates. Okay. Right. So the ECB path forward. We have here a interest rate probability chart. So we have to turn to ECB. It's under the spotlight. Okay, in my opinion, ECB is one of the most spotlighted, let's say, banks of the G10 group at the moment. So basically, the ECB is widely expected to do a 25 base points rate cut on December 12, as we can see here, right here in front of us, and then continue its gradual easing cycle. So let's break it down here, right? So we have so we have here the next expected move to be a cut. Sorry. The probability of this to happen is 86%. The current rate is at 325. The change by it would be 25 basis point rate cut, and the next meeting will be on the 12/12/2024. Okay, so that would be on I think on a Wednesday, most likely Tuesday, Wednesday, just depends where you were. Now, the why. So basically, there has to be a reason, right? 86% of people are expecting to cut to 3%, and the other 14% is expected to be cut into 2.75. So that is 50 base points. Okay. There was a time of this month that this was somewhere around 60 and this was somewhere around 40. Okay. And now, because of the data that we are receiving from ECB, from Europe, Eurozone, we're having this switch up. All right. So the reason is deteriorating activity indicators. So especially in core economics like Germany, France, all of these big economies from Eurozone, they are declining inflationary pressures, and this is underpinning the move. All right. So core inflation has consistently trended lower. It's now trading at 2.7%, and this is 100% supporting a dovish policy shift, okay? If we come to ThinLogic's economic calendar, I will select only Euro area. Sorry guys, just a minute. Wow, I don't know why, but I'm something on my throat. Hopefully it's not a flu again. All right, let me put on the last month. Okay. Just looking for the PMI. There we go. So on the 29th of November, we had the release for the Euro area inflation rate year over year, and we have the month over month as well. It's trading at 2.3%. Sorry, not 2.7%. Now, trading at 2.3%. The Euro inflation month over month came in to be negative 0.3% from the consensus of 0.2%. And the previous of 0.3%. So basically, they were expecting to be 0.1% lower than the previous, but indeed, it happened to be negative 0.3. So that's really, really fantastic rate. Okay, great news. Now, for the inflation rate, the year-over-year inflation rate, it's trending at 2.3%. It was a little bit higher from the previous, from 2%. So from 2%, we went all the way to 2.3%, and now we're consistently maintaining at 2.3%. If I put into low, I would like to see the core CPI as well. Core CPI, it's not in there. Okay, that's fine. 2.5 expectation, that's expectation. Okay, so yeah, that's these two here. So 2.3% and 0.3%, but we can see that the monthly indicator is actually coming down. Let's have a look into these. Put into a line chart into 3 years, and we can see that it's gradually coming down. So the actual was, let me take the forecast off. So the actual was 2.5% on a monthly basis inflation on the 1st of 4 of 2022. So that's pretty much 3 years ago, 2 years ago. And now it's trading at negative. All right, we had some negative releases here at 0.4, 0.5, 0.4, now 0.3. Most likely what we can have is a rebound to up inflation for now, okay? The reason is, so basically what I'm looking to get for next month release is somewhere around this, okay? 0.5% inflation. The reason why I'm thinking is we're gonna be having the retail market much more hot than before. And that's due because Christmas. Okay, so I went shopping, I think it was Saturday with my missus, and we couldn't even barely walk. Okay, there's lots of things happening. So Black Friday, Australia. Let me see if we get some photos. Images. So yeah, that was literally packed as this. Okay. So that record Black Friday sales amidst economic challenges, as you can see, this is insane. Okay, this is insane. I don't know if this is true actually, because every single person is looking at the phone. So I don't think this image is actually true. But anyways, that was like that. Okay, that was literally like that. It was full of people. All right. Well, this one looks more real. Yeah, so it was full of people. And you know, the deals were pretty good. It was 50% off, 60% off, 80% off. And that shows to us how the people are spending money. And if they're spending money, then what will happen with inflation is inflation will go up, right? And that's exactly what I think will happen on Euro area as well, okay? So most likely we're going to be having some sort of heightened inflation, well, at least come back from negative to positive, and then going upwards and continue to go higher, okay? And But with the scenario we're having right now, then it's most likely we're going to have a 25 basis points cut. Okay, so the meeting may feature a significant change in the ECB forward guidance. So that's the new thing that I'm going to be observing on the 12th of December. And some people are expecting that the restrictive bias in the statement to soften, and they will be signaling readiness to ease further if the economic conditions deteriorate. Okay, so if economic conditions continue to go lower, inflation, GBP, GDP, and etc., they will continue to lower the target. Okay, they will continue to lower the current rate. So the implication why it's likely to support growth, because with lower rates, mortgages are cheaper, people will be buying more real estate as well. So while we do have some likely to support growth in 2025, most likely the ECB must treat carefully to avoid some sort of eroding market confidence. So and additionally, we do have some political risks, such as the budget standoff in France. This could complicate the matters further if that doesn't get resolved soon. Okay. So yeah, a cut from ECB, 25 basis points cut, changing a little bit the bias to be more dovish, and this would definitely drag euro dollar down. Okay. So let's go for euro dollar. There you go. So euro dollar opened up this last week. Was this last week? Yeah, last week with a gap up, came to close, went all the way up, touched the 106. Well, barely touched the 106 actually. 6, barely touched the 106 that I've mentioned it to everyone, and now it's going down. Most likely we're going to be coming to 102. Okay, and that's my target for next quarter, first quarter of next year. All right. If it continues, then most likely 1.0, right? So parity. Okay. Really, really crazy, right? A few weeks ago, we were trading at 112 right there. Oopsie. Right there, 112. Okay. And now we're trading at 104, 105. So really interesting how the market is going. Now, we have as well the Bank of Japan that I think it's worth to talk, that I've just remember. The Bank of Japan is very hawkish, right? It's on a hawkish pivot. So the Bank of Japan is sending signals of a potential departure from the ULP, so the ultra loose policy. This last week, Governor Weather hinted at a possible rate hikes if inflation remains above 2%. That we did have the release. Okay, so let's come to economic calendar here. Let's change to Japan. And there is... Oh, that's for this week. Okay, sorry. This one. Let's see. There you go. And that's the PPI. Where is the CPI? Let me take this off. Well, it's not showing to me, but if we go Japan CPI, Japan Consumer Price Index, Japan inflation rate, there you go. Okay, so the inflation is above 2%. Okay, it was much higher on the beginning of this year, but we still have some potential for what he mentioned it to be true, because he says if the inflation remains above 2%, we will have a possible rate hike, and then this will reflect the newfound confidence in Japan's recovery. Okay, so What does that mean for Japanese yen? So while these will boost the yen in the short term, pretty much we saw that happening, okay, on the USD JPY. If you look USD JPY here, we can see that it was trading on an uptrend. All right, went all the way up to 156, 768, and now it's trading down to 149 or 836. That especially this big decline here, okay? Especially this big decline here was when we had weather comments, and then this was when we had a higher inflation, okay? Inflation above the 2%, okay? So while this can, boost the Japanese yen, so making USD JPY going down, for now, USD JPY remains above the 150 level, right? Well, not that above, but somewhere around the 150 level. But I think traders and investors should brace for some volatility if the Bank of Japan acts sooner than anticipated, all right? As we all know, the BOJ, they are a surprise. It's box of surprises, and we never know, right? Sometimes, so basically, the last release was to be 1:30, and then it got released at 3 p.m. Right, so we never know. Some years ago, the release was supposed to be at 2 p.m. and it was released at 10 a.m. All right, it's we don't have much information from them, so it's really really upfront, man. They're really crazy. To be honest with everyone. All right. So I thought it was worth to touch base on Japanese yen as well. Now, does anyone have questions? No questions. We have 2 more topics to go. Yeah, someone? No. No. Okay. I thought someone unmuted self to talk about, but it's okay. All right. Okay. So we have 2 topics remaining. We have Eurozone dynamics, and then we have key market indicators to watch. And then we should be finishing. Aditya says I'm short on CHF JPY. CHF JPY. What's the reason for that short? Do you know? Can you explain to us? If you want to mute yourself, that's fine as well. You can definitely talk to us. Oh, that's pretty good short. What price are you short? If you don't mind me asking. That's a really good trade. If you catch from here, if you catch somewhere from here, that was a good trade. Really interested to know why. Because CHF.
I was short 173.
173. Oh, wow, 173. Wow, that's really good. That's really good. Wow, that's awesome. Okay. Congratulations on that trade, man. I love that one. Definitely there is some potential to continue to go lower, I think. But yeah, good one. Okay, so moving on, coming back to Eurozone dynamics. All right, so moving to Eurozone, so we have some mixed set of economic and political challenges. Okay, so let's just start with France, where the political instability is sort of starting to show itself again. So the NRP, so that's the National Rally Party, they've issued a how can I call this? They've issued a ultimatum, right? So to the government over the budgeting disputes. If unresolved, this could result in a no confidence vote, potentially toppling the administration. while the markets have largely shrugged off these risks, prolonged instability could erode investors' confidence in the euro, and that could be fatal for the euro. And such things like euro JPY as well. If we look at euro JPY, it's a good short trade. I've mentioned that already hundreds and hundreds of times. If we look to euro AUD as well, it's a really good trade short. Look at all the move down here. So that there's plenty of opportunities to be short in euro at this stage of the, in my opinion, right? In my opinion, I do think that euro is a short because beyond politics, the Eurozone economic recovery, it's facing some hurdles. So despite the Q3 GDP surprise at 0.4% growth, I think the weak server data suggests a softening trajectory. So, the ECB update forecast could reveal downward revisions for 2025. And if the, with the GDP growth expectations potentially dropping from 1.3 to 1.1, this could even further fulfill the move down to the bearish move to euro. So now comes the question for the inflation outlook, right? So I would say on a happy note, inflation looks to be moderating faster than anticipated by the central bank. Because if you remember, they thought that inflation would be under control in 2025. So most likely we will be looking inflation under control maybe in 2024. But with the release of December, just remember, guys, the release of December will happen only in January next year. Okay, so we won't be looking to be trading that news like in December. We will be looking to trade that news on January. So I'm expecting somewhere to be reached by 2025, the 2% target to be reaching by mid 2025. And that's much earlier than the forecasted, okay? The previously forecast. I think the previously forecasted was looking to be October, November, December, last quarter of 2025. So pretty much this can support the case for continued policy easing, but it also highlights the fragile state of the Eurozone growth. Okay. So it's a dual trade balance pretty much, because we have the potential to be weakening the euro, but then the potential to be strengthening the economy. Okay, most likely what investors will be doing, they will be trading short euro because it's easy to get access to that sort of trade than actually placing your money, parking your money in Europe, or getting loans, or buying real estate, or buying land, etc. Okay, so that's my opinion. Continue to go down Eurozone, the dynamic, and shorting euro would be my take for this December. Now we have 10 more minutes, so the key market indicators to watch. Okay, if you would ask me, so what should we be looking to what should we be looking to be trading? All right, so let's discuss some critical market indicators that you should be tracking. Right, so first one is the PMI data. So across regions, globally, across countries, G10 economies, manufacturing PMI remains subdued. So for example, November PMI in the Eurozone came in at 45.2, well below the expectation threshold of 50. And this pretty much is underscoring the ongoing economic slowdown. As of we look to PMI in Europe, if we come here on, let me check this. Sorry, not on Europe, on USA. If we look to on today, Neil, to the release. So we had the PMI, the ISM manufacturing PMI. We came in at 48.4 from the 47.5. So that's much better than what I expected. All right. So PMI data is a indicator that we should be looking. Okay. Now, what I think it's worth to be following as well is the DXY, is the US dollar, as well the Japanese yen and the euro fluctuation. All right. So just a second, guys. Just a minute. Okay. Okay, that's good. All right, cool. All right. Sorry, guys. So what I will be looking in some currency movements would be the US dollar strength. All right. With coupled with the Japanese yen and the euro fluctuations. This will reflect a very broader market sentiment. Most likely we're going to be having a weakening euro. For instance, we could introduce inflationary pressures like while the stronger yen could dampen the Japanese export competitiveness, the euro inflation pressures going down could be looking to continue to weaken the euro. So most likely we're going to have like euro JPY, as we were having a look here, to be a good trade on continuing to go short on this market. Okay. Well, of course, waiting for pullbacks and etc., but that's a good trade. And then last but not least, we have to be careful with geopolitical risks. Beyond the tariffs, the crazy tariffs that Uncle Trump wants to do, if I can call him like that. Energy prices as well as the BRICS policies could drive some market volatility in 2025, right? I definitely would be very proactive approaching to portfolio diversification. It's very, very advisable giving these type of risk. Okay. So that's pretty much from me today, guys. Thank you for staying with us. Yes, Aditya, go ahead. Ask me a question.
Yeah, look,
But yeah.
I was thinking about the France finance policy on December 18. So how will it affect the euro area and the euro?
So how would the French finance policy impact the euro?
Yeah.
Okay. You mean the budgeting?
Yes.
Okay. So basically, as we know, the French financial policies as well as the political stability, there is a huge influence through the Eurozone. And as we know as well, they're one of the largest blocks economy, into Eurozone as well with Germany, coupled back with Germany. So current developments such as the NRP, so the National Rally Party's opposition to the government budget, it's giving some political and fiscal tensions in France, and that could definitely affect the euro. So the budgetary standoff and the political uncertainty. So the current situation is basically that the NRP has threatened to a no confidence vote over the budget disagreement and increasing the risk of a government collapse. And the opposition is demanding to include pension indexing, so tax moratoriums, I don't know, something like that, and reduce the drug reimbursement. So which would cost, they've done an estimate, I think was $10 billion if this gets adopted. And we can define this in two impacts for the euro, right? We can have the short-term impact and the long-term impact. So the short-term impact is that the political uncertainty can weaken the euro due to a diminished investor confidence, and the markets, they often react negatively to instability in a core Eurozone country, as it creates unpredictability for the fiscal policies as well as the economy and manager. Now, on the longer term, if the government actually collapse, it will lead to a prolonged leadership void or policy stagnation. The euro may face sustained pressure. So it's pretty much a win-win game if we continue to short the euro, because in both situations, in both case scenarios, we have a very weak scenario for euro. Okay, so there's a positive scenario. So the resolution of the budgetary dispute. So if the French government and the opposition, they reach a compromise that aligns with the fiscal discipline, then it could restore the confidence in the euro. And the second point is that the growth. So if France policies lead to reforms that boost competitiveness, particularly for SENS, it could enhance economic growth and support the euro in the longer term. So basically, France, policy are a double-edged sword for euro. On the one hand, we have political uncertainties and fiscal indiscipline, and this will threaten to weaken the currency. As on the other hand, we have reforms and resolutions that could stabilize the euro and contribute to a strong economic performance across the EZ, right, the Eurozone. But for investors, I think, and for traders, you should be monitoring the French budgetary developments, and the ripple effects across the bloc remains very, very crucial for that as well. So hopefully I've answered your question.
Thanks.
No problem. All right, guys, thank you so much. I see you tomorrow. Have a great week ahead. And yes, thank you. See you guys. Bye-bye.